Welcome back to session 2 of Bookkeeping as a Business. Hopefully, it's fairly clear what we're discussing today. We're going to talk about what bookkeeping is. I kind of wanted to, before we jump too far into this course, I wanted to very briefly go through some of the different types of accounting services that are out there and try to list kind of the general categorizations that a lot of these things fall into so that as you guys are starting to maybe think about putting a business together, you can also be thinking about what services you feel like you would best be able to offer because you can mix and match a lot of these. But I did kind of want to run through all of the different types. Some of them do require formal education, some of them do not. And I just wanted to cover the entire accounting profession briefly. Okay, so the first thing, audit and review services. So these services are probably going to, unless you do have a formal CPA license, these are probably going to be off limits to you. So audit and review services are typically used by traded companies. So anything that you can buy stock on the stock market, SEC filed companies. And then there are some other types of companies that will typically need to have annual reviews done, formal annual reviews. Things like franchise owners are required to have audits done on an annual basis. I see a lot of not-for-profit get audited. Mostly it's not a requirement for them, but a lot of times they will do that because they obviously want to be able to tell the people that they're asking to give a lot of money to them that they're using those monies responsibly and that they're representing their financial health well. So audit and review services, basically a client will call an accountant in, a CPA, and that CPA will talk to them and the sole job on these audit services for a full audit is that they are going to go in and they are going to look at the financial statements that the company presents, and they're going to run a series of analyses and do some digging into the support and the methodology that was used to create those financial statements, and then make a professional recommendation on whether those financial statements accurately represent the health of the company. So they don't go through every single line and look up every single invoice or receipt or things like that. They will review a lot of different things, but they will review the financial statements as a whole. They will do some samples where they will go and ask a company to provide, they'll just randomly pick some expenses and ask a company, to provide the support for that expense, just, as a random check to make sure that the expenses that are on the books are true expenses. They'll run a lot of analytical procedures on revenue. And all of these things are done according to GAAP, which is GAAP is GAAP. It stands for Generally Accepted Accounting Principles. And so audits, formal audits are typically the accountant is looking to make their determination on whether those financial statements follow GAAP and are materially correct and accurate. You can have audits done that are not GAAP. Those typically, if you've ever read an audit report, after one of those are done, there's a huge section in there about what methodology the financial statements are using and how they were evaluated against that. They will state very clearly that this was a non-GAAP audit. And then review services are very similar. They still need to be provided by a CPA, but they're typically much smaller in scope. So with a full audit, they go through everything. They, will sometimes literally come on site with a client for a couple of weeks. A whole team worth of people will come and they will just sit and ask a lot of questions. Normally, bigger companies will literally set up full bullpens for the audit teams to work for those weeks or months or however long the audit takes, because they try to look at everything. If it's a large company that has, some fairly complex systems that do a lot of their estimates and things like that, they will sometimes audit that. Every audit is a little bit different in that it's up to the CPA or the partner or the lead on this to design procedures, a list of procedures that they feel will get them to the point of comfort with those financial statements. So if it's a smaller company, probably not as many steps. If it's a bigger company, could be huge. And there are certain steps in there where if they run across something in an audit, they might, in the middle of the audit, add some additional procedures to get comfort. And I could go into If you've ever taken an audit course or want to look at that, there's a lot of them online that you can look at, but there are lots of different steps that are taken and different recommendations on what to look at and when maybe you need to ask for more when something's not needed. Lots of good info out there. A review service is basically the same thing, but it's at a much smaller level. So it's typically not going to offer full assurance on that. And the letter will say, we reviewed your stuff at a little bit higher of a level to where we really didn't dig into the stuff like a full-blown audit. But a lot of times reviews will be used for if a company is trying to get a lender to loan them a lot of money. That lender might require at least a review done on the books so that they basically know that client who's asking for a lot of money isn't cooking the books and making their company look healthier than they are, because they want to make sure that company will be able to repay that loan. So this is something that probably, if you're starting a bookkeeping business, again, unless you have a CPA license, that you probably won't be doing, because it does require a license to do this. You have to have a formal certification. So next up, if I can get my screen to work, is tax. There's a lot of stuff that falls under tax, but in general, tax services help people with those regulatory requirements of filing an annual business return. So almost every type of business structure is required to file an annual report with the IRS, and in many cases, state or local agencies. And so tax services typically help people put those together. And then also there's a subsection under that where people, some people will help businesses or person plan their taxes so that they can optimize those deductions and not pay as much in tax legally. So they, learn the tax code really well, and will look at people's financial statements and understand how their businesses work, and will make recommendations on maybe how to structure the business in a certain, or certain expenses, tell them, hey, you really need to start watching these expenses because these might help you get a tax credit or a tax deduction. And then they'll also, at the end of every year, prepare your returns, review them with you, and then file them for you and help arrange payment with the IRS. You do not have to have a certification to do tax services. All that the IRS requires is for you to have an active P10. I would have to look up actually what that stands for, but a P10, it's really easy. It's free. You can go, like, I do not have a CPA license or an enrolled agent license. So when I got my P10, they ran a background check on me. I had to go down to the local police station here and be fingerprinted, and they ran a background check because they do want to make sure that the people who are filing taxes are, honest people who are trying to do a good job. So I do have an active P10 and I do file a few returns. My particular practice, we don't do a lot of tax, but only because I have so much bookkeeping and I don't have a lot of experience in my before bookkeeping career doing tax. Um, so I don't do a lot of it, but this is a service that you will see paired with bookkeeping quite often. So if you have any, there's a lot of training out there on how to do taxes. So a lot of people, this is a really easy thing to roll. If you're already doing the books for a company, it's a fairly easy sell to be able to say, hey, and would you like some help filing your taxes at the end of the year? And it's a really good way to upsell your bookkeeping business. There is a specific, you don't have to be certified. CPAs, though, are allowed to file taxes on behalf of people and represent people with the IRS over any tax matter. The CPA is kind of the gold standard in terms of an accounting license. It's something where they have to do annual training. They have to take ethics courses and pass them, and they have to maintain that certification. They have continuing education requirements every year that they have to do. The EA designation, that stands for enrolled agent, it's a kind of, the best I can describe it is an EA is like a tax only CPA license. So they kind of, and by taking an exam, that they understand the tax code and are also ethical and honest and can help people with this, and they are allowed to represent clients with the IRS over any tax matter. So typically there are a lot of things that people without certifications can do. Like I'm allowed to file people's taxes and I'm allowed to speak with the IRS over those tax returns. I normally just ask for my clients to sign a power of attorney that basically gives me permission to speak with the IRS on their behalf. I typically can only do that with tax returns that I myself or my firm have filed. So if somebody comes to me off the street where they maybe had another accountant file some forms and they're getting letters from the IRS about something being wrong, or there's an audit that's happening, there are some constraints on what I can help them with that, because the IRS would prefer to talk to someone who's a little bit more up to speed on that and have proven that by taking a test. But in general, you can do a little bit of tax services in addition to bookkeeping if you want. And then there's kind of this nebulous, very wide, broad area of advisory services. So this is like consulting services where somebody just hires you because you have financial expertise and maybe they're a small business owner and they know the basics of balancing a checkbook, but they, are don't feel like maybe they're making the money that they would have expected to, or their margins don't really feel as high as they expected them to be. So they might bring in a specialist or a consultant who can kind of look at their operations and their financials and kind of offer some recommendations for how to improve their business. And this is a huge category. There's huge gray lines between, tax and advisory and audit and advisory and bookkeeping and advisory. So just basically anything that you know that somebody else doesn't, that can be bought and sold. So there are formal certifications. I've listed some of them down here. This is typically people get these certifications when they plan on working on larger clients in which they're getting into huge amounts of data, but none of these are required. And if you know your stuff, that's typically enough. Um, I've listed some of the things down here that kind of fall under that advisory umbrella: financial planning, doing some risk management. I started seeing kind of an uptick in human resources advising, and due to some of the COVID things where people are trying to figure out, can I afford to provide health benefits to my employees? What's the difference between a contractor and an employee? Full time versus part time, any kind of labor standards, maybe some FMLA, things like that. There's a lot of advisory around the HR function. Maybe somebody wants to hire somebody to write an employee manual for their company. Lots of things like that. But I do a little bit of business valuation with this business, where I'll have someone calling me who maybe is a business owner and has decided that they'd like to step away from that, but it was a smaller business. And so they're ready to sell that business to somebody else, but they want to figure out what that business is worth and what they should probably price that as. And I will help them come up with a good business valuation. Um, and then performance improvement, I kind of mentioned that already, but like some things that I typically will look at will be around labor, where this is what somebody is charging for a specific widget, let's say, and this is how much it costs in terms of time and material to make. And the difference between those two is what the company is actually making before all of those overhead things, like, paying rent for your store and paying insurance and taxes and all of those kind of things. And so I do a lot of performance improvement in terms of labor and helping them figure out what is the right price to sell something for, to make sure that after all of the business expenses and all of the costs to create whatever it is that they're selling, makes them money at the end of the day, because you don't want to be working at a loss all the time. So I do some advisory work around that. um, there's just advisory kind of runs the gamut for just anything that you have some expertise in, that you can help somebody and lay something out in an order that ends up making sense for them. So let's talk about bookkeeping. I've kind of lined all of this stuff up and I'm about to start popping some things up. We'll start with variance analysis. So this is typically after you've gotten the books together. Uh, you Some of the things that a bookkeeper will do, they will run a profit and loss and compare this month's activity to maybe prior period activity to see whether it makes sense, to see whether we're seeing any kind of trends where your labor expenses are slowly climbing up but your revenues are going down. Like, those are things that maybe a bookkeeper would look at so that they could alert their client that, hey, something looks a little bit odd, it looks like you're paying a little bit more. So typically that's done month over month, but there are some weekly things that can be done with that, and even quarterly, multi-year, lots of things around that. In general, though, bookkeeping is just we maintain accurate and organized financial records. That covers a lot of different things, and I'll start popping them up on the screen. Accounts payable. So accounts payable would be anything in which you've received a bill from a vendor of yours, but you haven't yet paid that bill. So accounts payable would be anything for which you've gotten an invoice from someone and you have it in your system, but it's scheduled to pay. So it's not an expense yet because it's not paid. Cash basis, and we'll go through that later. Accounts receivable, that's the other side where you may have provided a service and you've billed your client for something, but they haven't yet paid you. So accounts receivable is all of the invoices that you've sent. Account reconciliations, this is a big part of our monthly process. Is we go through normally checking account, savings account, anything in which you can get a bank statement or a loan statement. We will reconcile that to make sure that the amounts that we're showing that are owed or that are owned on the books match what the bank is saying, and figuring out if we've entered something twice or we forgot to enter something. So we do a lot of account reconciliations just to make sure those account balances are correct. We do revenue and expense coding from those financial statements, from those bank feeds or those credit card feeds. We go through, and when we see a deposit come in, we determine, is that revenue? What type of revenue is that? Did it have any fees taken out beforehand? And we book that appropriately to the general ledger. We do some sales tax filing a lot. Many states have you pay sales tax, remit sales tax to the state on the amount of materials and things that and all of the states are a little bit different, but you remit that to the state generally once a month. There are some situations in which you do that a little more often or a little less often, but bookkeepers will typically do that. So we will go through and we will figure out what the company made in whatever period we're reporting, and we will fill out those forms for the client and remit that payment to the state on their behalf. We also generate the financial statements. So after all of this coding and AR and AP and everything is checked out, we normally provide financial statements, balance sheets, cash flows, profit and loss, any custom reports. Um, that's the role of a bookkeeper. And then we do payroll. We will typically process payroll. My company helps set people up in payroll systems and helps monitor that the monthly or quarterly or annual filings are being done appropriately. We'll enter timesheet data and process that payroll on a weekly, biweekly, monthly, whatever their pay schedules are. We'll do that for clients. Just general record keeping. We will A lot of my clients will actually have their vendors send invoices directly to me. And part of my responsibility is to make sure that I am putting those somewhere to where we have them at another point. We also maintain the chart of accounts. So this is the list of account numbers that we are assigning all of these revenues, expenses, all of the balance sheet things to. So if, for example, a company ends up having an expense that we kind of need to have separate from everything else, we are responsible for going in and setting up that new account and choosing the right account type to make sure that it's showing up on the financial statements appropriately. We sometimes handle expense reports. So if an employee maybe travels a lot and they use their own money and then they submit an expense report back to the company to be reimbursed for that, either on their next payroll or with just a regular check cut, that's part of a bookkeeper's job, where we will take that expense report, make sure that all of the appropriate approvals have been made on that and that the money makes it back. We also do bill pay. So this is, again, a lot of my clients will just have the vendors send the bills directly to me. And part of my job is to get that stuff into the system and then make sure that we're getting those bills paid on time, that we get those vendors. Depreciation and amortization. So these are expenses that are recorded when you have bought really large things, like maybe a building or large equipment or furnishings for a retail store. Typically, when you buy those, you do not expense those immediately. You will normally put those on your balance sheet as what's called a fixed asset. and then you amortize that expense off over the life of the term. So, for example, a building, if you bought a building, you will typically take that, let's say you spent $100,000 for that building, you will take a portion of that over, in general, a 26 to 30 year time frame. You will take just a little bit of that original purchase price and call that expense every year for tax purposes. So we're normally responsible for making sure that those entries get into the system. We partner with some tax pros to make sure that what we are reporting as depreciation and amortization matches what they're filing for our cash basis, but there are some nuances there that we will talk about in later courses. Inventory management is another thing that we will do. We will sometimes set up people's inventory systems to where when they're buying products that will sit on a shelf until they're sold, and then we need to make sure that we're recording that those products are coming in and sitting on a shelf, and then also that we're recording that they are disappearing as those things are bought in the store. And that's all.